Good afternoon, everyone, and welcome to the top 4 technical analysis techniques for trading Nadex binary options, call spreads, and touch brackets. My name is Gail, and I'm going to be your hostess for this morning. Can everyone hear me okay, and can everyone see my screen? I would like you to take a moment to read over the Nadex risk disclaimer. This is for your protection as well as ours. And basically, you just need to remember that anytime you are trading, there is risk involved, okay? And even with Nadex binary options, call spreads, and touch brackets, there is risk involved, and you should never trade with money you cannot afford to lose. Now, for those of you that do not know me, my name is Gail Mercer. I'm the founder of TradersHelpDesk. I have a little over 15 years of trading experience, and I started out with a company that programmed indicators and really fell in love with the price bars. I do specialize in price action, volume analysis, and divergence because I believe they are leading indicators. I'm also a frequent contributor for Stocks and Commodities, Traders World, and Top Shelf Magazine. I've also been a speaker at Traders Expo, Traders World Online Expo, and the Wyckoff Volume Conference. I'm also the author of Trading Nadex Binary Option Series, which is available on Amazon. Now, what I would like to do today is go through the top 4 technical analysis techniques that's used on any market. It doesn't matter whether you're trading forex or futures. It really doesn't matter. You know, these are the top 4 technical analysis techniques. Number 1 is price patterns. Number 2 would be moving averages. And then any indicator that identifies when the market is overextended, whether it's overbought or oversold, okay? And then support and resistance. I use a combination of all 4 of these for my own trading, okay? Now, what are price patterns? It's a combination of different techniques. For example, candlesticks is the number 1 price pattern technique. Then you have double tops, double bottoms, pennants, triangles, head and shoulders, cup and saucer, and there's probably at least 50 more out there. Okay, it's whichever one that you see that you can identify and actually implement into your trading plan. Now, I don't recommend that you do 100 different price patterns. Just pick a couple and really become an expert in these couple that you have chosen. For example, I like double tops, double bottoms, and then I do candlesticks. Now, candlesticks is my number 1 price pattern. As most of you know, I've done a lot of candlestick presentations in the Nadex webinar room. So that's my number 1. And then it would be double tops and double bottoms because that's a type of support and resistance technique too. Now, the next one is moving averages. Okay, it can be a simple moving average. It can be an exponential moving average. It could be a weighted moving average. But it's the fact that you're using a moving average algorithm that makes the difference. Okay, the Ikimoku uses moving average. You can see the ribbons, Bollinger Bands, Keltner channels. All of that is under the moving average category. Okay. Then we have overextension. Now, this could be a couple of different techniques. It could be the RSI, it could be the stochastics, it could be the ADX, it could be pivot lines, okay? All of it would identify when the market is overextended. One of the reasons that you want to use this technique is to prevent yourself from going into a market that is overextended. In other words, price has moved too far in either direction, whether it moved too far up or too far down. You know, you're going to get a retracement. And sometimes, I'm sure it's happened to some of you, you go into a market only to have the market reverse on you. The reason that it's reversing is typically because it's overextended when you went into it. So that's the reason you're going to use an indicator that identifies the overextension. And then we have support and resistance. Now, support and resistance can be pivot lines. It can be previous highs and lows. It could be Fibonacci's. It could be trend lines. I like using the previous highs and lows. I have an indicator that just simply puts them on the chart for me. And that way I can always look to see, okay, is it going to test the high or is it going to test the low? Or did they fail to break the previous high or previous low? Now, this is an example of, what I would suggest that you do. And it's really pretty simple, okay? All it is down here, this is an RSI, and you can see you've got a lot of squiggly lines, and then all of this on here are your pivot lines. Now, the one in the center right here is your pivot line. You can see some of them have the P mark, some of them you can't see. But in this case, let's say that you're at the R2 and you are overextended, or let's say that you are at S2 or S1 and you're overextended, very similar to what you see over here. Then you get a bullish candlestick indicating that the market is likely to go up. You could actually develop a trading plan just off of the indicators that you see on the chart, okay? Now, the way that I like to do it is, I use an ATR and then I use previous highs and lows. All of these little blue dashed lines tell me where a previous high is. All of the red dashed lines show me where a previous low was. So in this case, I can keep up with all of the support and resistance based on pivot highs and pivot lows, as well as the stochastics, the RSI, and the ADX. Now, I have one setup that I trade that has all of these overextended at the same time. So in this case, the stochastics is overextended, the RSI is overextended, and the ADX is overextended. This tells me that this market will potentially come back down to this ATR stop, okay? And you can see here, the first move down was 40 pips. The next move down was 70 pips. Now that's tradable, whether you're using a binary option, whether you're using a call spread, or whether you're using a touch bracket. It is a tradable pattern that you can actually trade. Now, the key in all of this is developing a plan and then following the plan. And this is where most traders fail, okay? They don't take the time to develop the plan. Not only do you have to sit down and develop it, but you also have to back test it so that you can see what it's done previously, but also so that you can understand the way that it works. Then you have to spend time in a demo mode trading the plan. And this is one of the hardest, okay? Because nobody wants to spend time in demo. And most of the time you're going to have to spend, I would say, 30 to 60 days minimum in a demo testing your plan, okay? Now, when you're testing your plan, you should be capturing screenshots on entry as well as exit. You'll be surprised at the little details that will come out that you did not notice just by capturing these while you're trying to enter the trade, okay? I always tell my clients to grade themselves on how well they performed at following the rules. A lot of times you'll get excited. Oh my gosh, it's setting up, it's setting up. The key word is it is setting up, but it has not completed the setup and you're jumping in early. You know, that's not a market issue, that's a trader issue. And this is one of the reasons I really encourage you to develop the plan and then trade the plan with snapshots on entry and exit, because now you can go back and grade yourself on how well did you follow the rules. Sometimes you have to change the rules, okay? Then, once you have done that, you add money management. Now, I always tell my clients to never risk more than 2 to 5% of their account. I know in demo mode, they start you out with a $25,000 account, but trade it like it's a $1,000 account or a $5,000 account, depending on what you anticipate to open your account with. There's probably very few of you in the room that are actually planning to open your account with $25,000. So don't go in trading 10 contracts. Instead, if you plan on opening your live account with $1,000 or $2,000 or $3,000, then trade your demo account just like it's $1,000 or $2,000 or $3,000 account. The other thing is, remember your job as a trader. It is to take profits, okay? And the only way to lock your profit in is to close that position out, okay? And, you know, if it's offering 30 bucks and it looks like it might reverse, take your profit, lock it in, you know, cash out, close the position. Any way you want to say it, you know, take your profits. The other thing is, a lot of times you'll see the price bars are telling you this is fixing to reverse, it's going to go in the opposite direction, and you haven't made a profit, so you're sitting still in the trade. You know, it's okay to take a smaller loss. Remember, when you entered the trade, that was the maximum you could lose, but you don't have to take the maximum loss on every trade. You know, the other day I was in one, I believe it was on the euro dollar, and it hadn't given a profit yet, but I didn't like the way the price bars were forming. And so I ended up exiting with a very small loss instead of my maximum loss. Okay. And ask yourself, are you in this trade because the price bar is telling you to stay in the trade? Or are you in the trade hoping that it goes your direction? Okay. Don't trade if it's based on hope. Go ahead, close out the position. That's the better alternative. Now we're going to go and look at some charts now, but before we do, I just wanted to give everybody my website, which is TradersHelpDesk.com. And if you have any questions, you can always email me at gm@tradershelpdesk.com. So we're going to go and look at some now, and this is on the euro. And this is one of them that it's actually one of my setups. And I'm going to draw on the chart. It's right here where you're at the ATR and you're overextended on the stochastics. The only thing that I'm actually waiting on is for this to be a bearish bar or a pivot high. Now, in addition to that, I also like to go down in time. For example, the 360 minute, you can see these red lines here, and you can see they're all really close together. In other words, this is not making substantial highs. They have come back to this same area and they have tested it now. They made the high here, they tested here, couldn't break above, tested it here, could not close above it. So I'm expecting this to come down, okay? Then when I look down at the 60-minute chart, again, you see this double top formation right here. It is a very small double top formation, just like it was over here. Does everybody see that? So this is telling me, yes, this is probably going to go down. In other words, that it's setting up. Okay, it's not there yet, but it is in the process of setting up. Okay, what would I like to see for this to say, okay, I'm really interested in taking this trade? Number one, this ATR, it's a blue ATR right here, would flip to above price, and that would also turn it red. Price will come down to this blue dot, and then it will go back and test this ATR, and then it's going to form a bearish bar. That's the point that I would enter a touch bracket. Now, why would I choose a touch bracket? Because this is a move that's going to play out on a higher time frame. In other words, I'm going to time my entry on the 60-minute, but I'm actually trading this chart over here because I believe that we're going to get the bearish bar, and I believe that this will at least come down to 1300. Okay, I want, and it's potentially going to come down to here to test this previous low. Does everybody see that? That's the one I want to use a touch bracket, because if it comes down to here, I can make more money using a touch bracket versus just a binary or a call spread. Now, does this work with other time frames? Of course it does. Okay, the time frame just tells me what instrument I'm going to be trading, whether it's going to be a binary option, or whether it's going to be a call spread, or whether it's going to be a touch bracket. I can actually turn this one into, let's say, a 30-minute chart. Okay. And then this one would become a 15-minute chart. And then this one would become a 5-minute chart. And it would be the same technique that I used, regardless of whether I'm trading, the euro or the USD JPY. Doesn't matter. The only thing I have changed is the time frames, and now I'm going to be using a binary option that has a 2-hour expiration versus a touch bracket that has an end of week expiration. Okay? Does everybody understand that? Now, these are my indicators that I designed for TradingView, but I can actually do this with any standard indicator. What would I need to do? First, I would need to decide which indicators I'm going to use. And I'm just going to take all of these off. Does anybody in the room have a favorite indicator that they want to use on here? Or any suggestions? Okay. The RSI. Okay. So let's come over here and let's add an RSI. So that would be your overextension. Let's see. We're going to use the RSI. Okay, now that's to identify the overextension. Now we're going to use a MACD. There's our MACD. That's our moving averages. And we have Bollinger Bands is another indication. So I'm going to save this as a template. So now I'm going to apply this template across the board to all of my time frames. Okay, now we need a way to enter a market, right? So I'm going to open up a Word document, and we're just going to type out a trading plan here based on these 3 indicators, okay? So I would say number one, price is at either the top or bottom of the Bollinger Band. Okay. And then the stochastics, I'm sorry, the RSI needs to be above 70 for a short or below 30 for a long. And what about the MACD? Well, you know, the MACD, if you're just going to wait on the color here, you're probably going to be a little bit too late. But what if instead of that, we used a divergence? Okay. For example, you can see from here to here, we're making higher highs, but here we're making lower highs. So you could actually say, okay, divergence on the MACD. Okay. So now you have the beginnings of your trading plan. Okay. Now, what would create an entry? Whoop, wrong one. Okay. For short, you need a bearish bar. For a long, you need a bullish bar. Does everybody understand that? So in other words, you could have been looking for a setup on this bar, actually came in on this bar. And you can also see that it rejected the high of the Bollinger Band. Do you see that? If you go one step further, you could say, okay, just based off of price patterns, okay, if I had drawn, and this is something, you know, if you don't have an indicator like I have, you have to draw lines on all of these highs, okay, but do you see here how they rejected that high? In other words, that's a double top formation as well. Okay, this is a 30-minute time frame. So what instrument would you be using on Nadex? Okay, in this case, you're going to be using a 2-hour binary. Okay, if using, you know, a 30, 15, 5 combo. Okay, could you take this and use it on a daily chart? Sure, just change your time frame. Here's your 1 day. And we're going to have to scrunch it up again. Okay. Here is your 6-hour chart. And this would be your 1-hour chart. Okay. Do you see how here you had a potential entry? Now in this one, if you didn't notice it, you did have divergence on the lows. Okay. This was lower right here. So price is making lows, but the MACD is giving you divergence. There's your divergence. This is your bearish bar, and you were right at the point of being overextended. Does everybody see that? But see, this is, you have to put the time in to do this, okay? You also have to be able to say you're not always going to have a trade setup, okay? You're having maybe 1 or 2 trade setups. You can see here it touched the top of it, but there's no trade setup. There's no trade setup, okay? You come over here, oh, there's my trade setup, okay? And you have to go and track each and every one of them. Now, I use something called Snagit. You can see it. It just kind of pegs itself to the top of the screen. They do have one that's called Jing that is totally free that you could use as well. Okay. And I mean, this is really, really easy to capture a screenshot and say, okay, this was my entry. So I just come in here and capture it, and then I can write on this and do anything else I want to make notes to say, hey, this was my entry. When I exit, I do the same thing. And I do notate a lot of my charts even now. Any questions? Can you scan for these user-defined setups on your charting platform? That would be called a strategy, KM. And then, yes, it would. They do have some strategies built into TradingView. You know, I don't rely a lot on strategies because what you do as a trader is different from what the strategy will do. So I don't rely on them. And even when you're testing KM, don't go, like 3 years back. Don't waste your time on that, okay? The reason is it's how you're going to do it on the live edge that is going to matter, okay? So you really, and what I mean by live edge is as this is building, that's when you want to be testing your trading plan because you're also testing what you are doing. I had someone comment today on YouTube about, well, as long as I'm in demo, I make thousands of dollars, but when I go to live, I lose money. Well, you have to look at what you're doing. What happens when you go into your live account that doesn't happen when you're in demo? Anybody? You now have an attachment to your money. Okay? So you're going to panic more. You're not going to panic when you got $50 in a demo account. When you have $50 of your money on that trade, then you start panicking and you really begin to know what fear is all about. What do you look to determine which currency pair has some kind of movement? Are you referring to volatility, Turin? I actually have one where I can set the volatility. Normally, it depends on what I'm trading too. If I'm trading touch brackets, I'm not as concerned with the volatility. But if I'm trading like a 5-minute binary, or if I'm trading a 2-hour binary, let's say the strike width is 4 pips, then I want that currency within a 2-hour period to be moving at least 4 times the strike width. So that would be at least 16 pips. And what I do, for example, I'll do it over here on the euro dollar. I'll change that into a 2-hour. Let me get rid of these. And then I have one that's the volatility. And I go in and just tell it, okay, I want it to be moving a minimum of 16 pips. So if it doesn't give me a green bar, then I don't trade. It's just really simplistic. Any other questions? Okay, if there's no other questions, I do appreciate all of you joining me this afternoon. I hope you enjoyed the presentation. Well, thank you, KM. And of course, if you have any questions, please feel free to send me an email. More than happy to answer any questions that you have.